One of the big rises was housing, which we are continuing to see. We talked about rents going up and also the cost of new construction.
What was the percentage on housing?
At 10.5%.
The Reserve Bank's stance around inflation is important because it will dictate what they do around interest rates. 2022 will be remembered as the year of steeply climbing home loan interest rates. However, in the last couple of months, we've seen a tapering of aggressive increases in interest rates. Could we be coming to the end of interest rate hiking for the time being? A lot of people are going to be hoping that's the case. Today we're going to look at an article from the ABC titled Reserve Bank of Australia rejects scorched earth policy to tame inflation with faster interest rate rises. So let's just start with the title. Reserve Bank of Australia rejects scorched earth policy to tame inflation with faster interest rate rises. To me, that basically sounds like the Reserve Bank is saying, no, we're not going to increase rate rises crazy like we did the last 6 months. What I would say is just be careful with what the Reserve Bank says, because I'm not sure how many of you are aware, but I think it was 2020, 2021, whenever it was, the Reserve Bank Chairman Philip Lowe came out and said, we won't see increasing interest rates till 2024. So obviously a lot of water's gone under that bridge, but the first thing I would say is take whatever you see in the news with a grain of salt. Reserve Bank of Australia Deputy Governor Michele Bullock has said the bank wants to hang on to as much of the employment gains made during the pandemic as it can, even as it tries to cool the economy to tame inflation. So firstly, that really doesn't make sense because they want to tame inflation. So to get inflation down, people have to spend less. But the thing is when people spend something, someone else earns it. So if people are spending less, then people are earning less. So it doesn't actually make sense to say they want to keep the employment gains unless what they're saying is they want wages to just decrease, which I don't think is the case. So it's kind of funny that you can pick holes in these articles, in the first sentence. It just doesn't make sense. If there's going to be less money and less spending in the economy, there's going to be less employment. It's not up for question. I mean, that's just logic. If you can't understand that, then kind of just dig a hole in the sand and stick your head in it. Speaking at an Australian business economist dinner last night, Ms. Bullock defended the bank's decision not to raise interest rates more sharply than it had, even though it is now not expecting inflation to fall below the top of its 2 to 3% target range until 2025. We're very committed to get it back down to target, but we have a flexible inflation target, and we have a flexible inflation target for a reason, she told the gathered audience of economists, many of whom work for the big banks. Okay, flexible. So that basically means take what we say with a grain of salt. It actually goes through this theory that that's kind of been coming up in my thoughts, and that is they're not going to aim for 2% inflation anymore. It was 2%, now it's 2 to 3%. I think what's going to happen is they might be aiming for 3 or 3 to 4%. That would have certain benefits, like people wouldn't be able to over speculate in property with inflation rates of 4% because it means the interest rates will remain higher. I think weirdly as well, it would kind of mean for the government they'd be more willing to create stimulus, because I think they've kind of learned from last time, we can't just print all this money and have all of this money getting spent and all of these assets getting bought. So I think if you have a higher interest rate, it's going to restrict people from lending to buy all these assets. And what they're going to have is what they want, which is wage rises. And that's what they've said they want to keep. They want to keep that employment figure up. So that's a theory I've been putting in my head for a while, which is they want to get more money circulating around the economy, which is going to keep wage rises up. I don't know if that's actually going to work. I think it's going to be a band-aid solution, but I think that's what they're going to go for. I haven't really had that much time to figure out, all right, well, if they do this, what does that actually mean? I know that it probably means for your average family that things aren't going to get better. They're not going to go back to the way they were. And if you still think that, sorry. tough times are coming, and I've been saying this for a while. This decade, we're going to have a lot more tougher times rather than the easy run we had in the last decade. In many ways, the easy solution might best be have a scorched earth. And yes, you could scorch the earth and get inflation back down very quickly. Is that the right thing to do? Her answer was a fairly unequivocal no, pointing towards the jobs gains made since the start of the pandemic that have resulted in the highest number of Australians employed on record and the lowest jobless rates in almost 50 years. We've made some really big gains in terms of employment in the Australian economy, she said in a response to a question from the audience. These guys just don't get it. The unemployment is built off creating 20 to 30% of the money supply in the space of 2 years. I mean, that's going to happen. Like, you give a bunch of people a whole bunch of money, people are going to try and make money, they're going to employ people. That's what you get. You get a side effect of massive unemployment, and you get inflation with that because you've printed all this money. But this is where the theft is, because the wage rises, which is like 3.5% or something, is nowhere near the amount of inflation. I don't know what the inflation is. It's 6% or something like that. But it actually means your ability to buy the same amount of goods and services is reducing because your wages aren't keeping up with inflation. So this is the sort of lie that gets pushed out. Like, it's a lie on top of a lie. They're printing all of this money. They're saying, oh, everyone's got jobs. That's good. And it's great. Our wages are going up, but actually our ability to buy things are not. So we are getting poorer by the day. In liaison, firms in most industries have reported higher than average wages growth. Since the middle of the year, close to half of firms reported realised wage increases of 3 to 5%, with a further quarter of firms reporting increases above 5%. New and timely data on wages outcomes for enterprise agreements from the Fair Work Commission shows that the average wage increases in newly lodged enterprise agreements were a touch stronger in the September quarter compared with approved agreements in the June quarter. I mean, these guys just don't get it. If wages are not increasing as fast as inflation, people are getting poorer. I mean, you could dress this up in as many different ways as you want, but when it boils down, people are actually getting poorer. So I just don't get it. Like, why are you trying to provide data when the data is people's wages are going up slower than what inflation is going up? In fact, Ms. Bullock said wages growth needs to remain solid to stop inflation from falling back below the target in the longer term, and as it had been in the years leading up to the pandemic. We still need wage rises in the order of 3.5% to sustain inflation within the band, she commented during the question and answer session. Again, I picked this up in the first paragraph. And that is, if wages remain in the band of 3.5%, people are getting poorer. Like, I don't know how people cannot understand this. Let me just use another example of how inflation can be distorted. If you had bought a $100,000 property in the year 2000 in Melbourne, on the outskirts of Melbourne, it'd be around $650,000 today. That's the effects of inflation. However, if you just had 100 grand and you didn't buy any assets with it, you just had your 100 grand sitting in the bank. If you use 4.5%, something like that, with compound, it's going to be about 240 grand. That's without paying any tax on it. So you can see here that if you just have cash, the increase in value of cash is lower than actually buying assets. And that's what's happening with wages. Our ability to buy assets is decreasing. And this is just not playing out just now, even though it's very obvious just now. It's actually been playing out over a long period of time. That's why the poor are getting poorer and the rich are getting richer, because the richer you get, the easier it is to buy assets. But if you just stay the same, middle class, which is what most of us are, it actually becomes harder to buy assets. So property is just a thing Australians think about, but if you look at the share market, it's the same thing. To buy an average share now is gone up a lot higher than what the price of a dollar has or someone's wages has. That's the end of the article for today. Again, guys, you just want to watch out what the stories that you're being fed in the media are, because they are not what you should be thinking about. I paint a pretty negative picture, and that's because, well, times are getting worse for the average person. So if you just do nothing about it, then they will continue to get worse. but I can tell you from personal experience that if you do things, if you take action, then over a period of time, your financial situation will become a lot better. I, for one, don't trust any institution right now. I don't trust banks, even though I have to work with them every day. I don't trust government. And the reason I don't trust it is because look at our society right now. Things are not good if you go outside. People can't even talk to each other anymore. We're stuck in front of screens all day. Things aren't going to get better. And if you just put your financial future in the hands of government because they're supposed to look after you, I'm sorry, we're not in that period of time yet. Things are proceedingly going to get worse. And I'm only saying that because if you look at the last 5 or 10 years, things have proceedingly got worse. So until I see any proper changes, then my mind won't change. And when I see proper changes, I'm going to see strong leaders. And we don't have the strong leaders yet. I go back to this old saying, not being sexist, this is a saying, strong men create good times create weak men create bad times, and bad times create strong men. So if you just swap men for leaders, I haven't seen any strong leaders, not here or anywhere in the world. So what's going to happen is the same as what's being served. So if you don't take action and do anything, that's on you. Stop blaming the world. If you want to hear more of my takes on what's in the media, you can go back and look at my last video where I comment on energy prices. Guess what? They're just going to go up. I'll give it away now. But if you want to see a bit more of a deeper dive, please feel free to go and watch that one now.